Today in crypto. The second largest cryptocurrency, Ethereum, is now sitting on a list of the top 100 assets in the world. Following the asset's recent price rally, Ethereum now stands ahead of prominent brands such as Citigroup, NYSE, Wells Fargo, NYSE, WFC, Shopify, NYSE, Shop, SONY, and Total. Going by the data on Asset Dash, Ethereum currently ranks 71 globally by market capitalization. Its market cap is over $136 billion, and the currency is trading at around $1,100. The legacy crypto moved 6 steps upward in the last 24 hours and a whopping 16 steps over the past week. If Ethereum manages to maintain its momentum, it could find itself in the top 50 list, considering the fact that its market cap is about $40 billion shy of the spot. A spot at the top 50 could make Ethereum larger than McDonald's, NYSE, MCD, Chevron, NYSE, CVX, UPS, and Accenture, NYSE, ACN. Meanwhile, Ethereum is the second cryptocurrency to make it to the list of top 100 assets in the world. Only yesterday, BTC peers reported that Bitcoin was the 8th largest asset in the world, ahead of Alibaba, NYSE, BABA, and Warren Buffett's Berkshire Hathaway, NYSE, Berkshire, in total market cap. Ethereum, ETH, is continuously making headlines due to the notable uptrend it has experienced in recent weeks. The second largest cryptocurrency by market capitalization has been up by 60% in the past week, and this bull run saw it breach the $1,000 price, making it move closer to its all-time high, ETH, of $1,400. It is currently trading at $1,197 at the time of writing. According to CoinMarketCap, CryptoQuant.com has disclosed in-depth insights about notable strides being made in the Ethereum network. The on-chain data provider noted, 2% of ETH supply is now staked in ETH 2.0 deposit contract. The total value staked is 2.29 METH. With a total supply of 114,150,894 coins, Ethereum has been shedding light on the huge potential the crypto space has to offer, as it recently made it to the list of top 100 traded assets with a market capitalization of $136 billion. The chemistry behind ETH 2.0 deposit contract. The launch of the much-anticipated Ethereum 2.0 happened on December 1st, and the deposit contract required a minimum of 524,288 ETH to be locked up. Therefore, ETH 2.0 is already live and seeks to transit to a proof-of-stake consensus mechanism from the current proof-of-work. The proof-of-stake algorithm allows the confirmation of the blocks to be more energy efficient and requires validators to stake Ether instead of solving a cryptographic puzzle. The total value staked for the deposit contract continues to grow by the day, as it currently stands at 2.29 million ETH. This is a factor making Ethereum's price surge and open interest increase overwhelmingly. Market insight provider Unfolded has revealed that ETH's global open interest has shot up by 75% in the past week. It looks like the sky's the limit for Ethereum, as disclosed by veteran Wall Street trader Raoul Pal, who acknowledged that its price might reach $20,000 due to the current bull cycle based on Metcalfe's law. Much like many in the blockchain and cryptocurrency industry, Stellar Lumens has taken up FinCEN on its request for comment for its proposed crypto rule. It may, however, not be the answer that Financial Crimes Enforcement Network is looking for. FinCEN has proposed regulatory measures for businesses operating with cryptocurrencies. Per FinCEN's proposal, unhosted wallets, or self-hosted ones, should be monitored by a third-person intermediary and should adhere to anti-money laundering (AML) procedures that fiat currencies are subject to. FinCEN has suggested that unhosted wallets need to be accounted for, a view many in the blockchain industry have opposed, as FinCEN has requested for comment on its notice of proposed rulemaking on requirements for certain transactions involving convertible virtual currency or digital assets. The NPRM, Stellar Lumens, along with many others in the industry, have hit it back with a comment. Stellar Development Foundation, SDF, said, "New technology deserves new approaches to regulation." The proposal from FinCEN seeks to apply a regulatory framework designed for a centralized, intermediary-based financial system that's not blockchain. Foisting antiquated rules onto entirely new paradigms doesn't work, and it won't work here. FinCEN's crypto rule may do more harm than good. Stellar criticized the FinCEN's regulatory rule for unhosted wallets as a misconception of how unhosted wallets work, stating that the NPRM's discussion of digital asset wallets reveals a fundamental misunderstanding of blockchain architecture. While it acknowledged that FinCEN's proposal comes as a preventative measure for harbored criminal activity, Stellar indicated that one of the main reasons for self-hosted wallets was so that individuals had the necessary tools to protect themselves from theft or crypto losses. Stellar explained that experts considered self-custody of digital assets as the safest way to secure their funds, adding, "Scores of cryptocurrency exchanges have been hacked, resulting in billions in losses. Individuals may also want to be accountable for their own funds, and may not trust a third party to keep an accurate and consistent ledger." It added that while the banking system in the United States was secure, many countries lacked that, with deep-seated issues that undermine trust in local governments and financial institutions. It raised the concern that with the new rule, financial inclusion will not be achieved. Rather, it may harm the unbanked, as self-hosted wallets provide them with a viable solution, being nearly free of cost, with low transaction fees as a need for a third-party intermediary is reduced. Additionally, Stellar noted that the initiative proposed by FinCEN may serve to do just the opposite of what it is tasked to do, which is to combat illicit activity. Rather, it stated that the proposed cryptocurrency rules may serve to complicate and frustrate law enforcement investigations involving convertible virtual currency. Stellar's concerns echo many in the blockchain and crypto industry, namely Circle and Coinbase, who have also voiced their disapproval. Additionally, the fact that FinCEN dropped a 15-day feedback deadline right in the middle of Christmas holidays has been heavily criticized. As the crypto market crossed the $1 trillion market cap status, S&P, Verge, XVG, and Nano, have come off as the cryptos with the biggest gains in the market today. The cryptocurrency market has entered new realms of price discovery as it surpassed the $1 trillion market capitalization today, a move that is catalyzed by the profound surge in the prices of the individual cryptocurrencies that makes up the market. While the market has seen extreme volatility in the past days, the growth of some coins besides Bitcoin, BTC, and the top 10 cryptocurrencies also stands out. The cryptos making big moves today in the market today, the coins with the biggest growth trajectory in terms of the percentage gains include Status, S&T, Verge, XVG, and Nano. The Status coin has seen remarkable growth since it came into the limelight in 2016, with the previous year marking one of its most remarkable fiscal years. Coming off as a mobile operating system built to completely change the way the world interacts with the Ethereum network, Status has grown its user base and adoption, fueling its 709% growth last year. The coin is up by 68% in the past 24 hours, marking its significance as one of the top gainers today. Verge, XVG, has defied the increasing calls to ban privacy coins in recent times by rallying to new heights. The coin has surged by 81.9% in the past 24 hours according to CoinGecko, complementing the bullish run it ended 2020 with. Verge is arguably one of the best performing privacy coins in the market to date, closing 2020 with a growth of more than 350% and recording an additional 108% growth this new year. Nano, is arguably the best performer of the top 100 coins in the market today. The coin, built as a low-latency cryptocurrency with no transaction fees, has seen a 109% growth in the past 24 hours to continue the bullish rally it ended last year, with more surges imminent. The cryptocurrency market is in a state of consolidation, and more imminent growth is bound as many investors are beginning to get drawn to the potentials of the emerging digital currency asset class. With the continuous adoption of Bitcoin by institutional investors, altcoins may also tag along in the rally, and if this happens, the $1 trillion market cap reported today may be the least the market will record in the near future.
FiCAS actively managed crypto ETP gets green light for European expansion. The first actively managed crypto ETP, the BTCA, was launched in Switzerland last July. Hit the like button and subscribe to the channel.